Imagine you run a very popular local sobolo or wache joint. Business is booming, business is nice. But before you announce to the entire neighborhood that you are selling shares in your joint, you clear out 490 million cedis from the business's bank account and put that money right into your personal pocket as a bonus. Then you open your doors, look the community in the eye and say, "Hey guys, buy 20% of my shop for 640 million cedis so I can pay off my meat and rice suppliers." Would you buy that share? Welcome back to the podcast. Today we are digging deep into the biggest market conversation on the Ghana Stock Exchange right now, ZEN Petroleum. We are breaking down the numbers, the controversies, and what it actually means for your pension money. And I'm going to do this in plain, simple English. Let's start with the headline that got everyone talking. When ZEN Petroleum listed on the Ghana Stock Exchange, it raised 640 million cedis, mostly from big local pension funds, the very funds holding your hard-earned SNET and Tier 2 savings. Now, there's nothing wrong with a company going public to raise money. That's how businesses grow. Clearly, we've seen that many times. But when analysts looked closely at the IPO prospectus, they noticed something interesting. Between 2024 and late 2025, over 490 million cedis had been paid out in dividends to the original private owners. Think of it like buying a second-hand car. Before the owner hands you the keys, they drain all the premium petrol out of the tank and replace it with fuel indicator reserve light. It's not illegal. It was his car after all. But when the new co-owners step in, they immediately have to contribute money to fill the tank back up. This brings us to the biggest misconception flowing around social media. Does ZEN owe a bunch of bad bank debt? The short answer is no. If you opened ZEN's Q1 financial statements for June 2026, their bank debt is sitting at a clean 0.00 cedis. They don't owe commercial banks a single CD in loans. So where is all the money tied up, you're asking yourself? Well, the answer is simple. The answer is that the money is tied up in supplier credit. ZEN owes 806 million cedis in trade payables. In layman terms, they took massive tankers of petrol and diesel from bulk distributors on a pay-later agreement. Let's use another analogy. Imagine a local provision shop taking 100 boxes of milk from a wholesaler on a 30-day credit agreement. The shop doesn't have a bank loan, but they heavily depend on the wholesaler's patience to keep their shelves full. ZEN promised to use the IPO money to pay down these supplier bills, but in their latest reports, those supplier bills actually went up to 806 million cedis, while cash on hand sat at 112 million cedis. It is not a default or a crime, but it means they are running their engine almost entirely on supplier trust. And here's the final kicker that every retail investor needs to understand about the Ghana Stock Exchange. When ZEN went public, the founder kept 80% of the company and only sold 20% to the public. Now, in corporate law, decisions are made by majority vote. If you own 80% of the shares, you own 80% of their votes. That means if every single retail investor and pension fund in Ghana gathers in one room to vote no on a decision, the founder can still single-handedly vote yes and win. You are basically buying a ticket like on a trotro or tata bus, whatever we call it now. The founder is in the driver's seat holding the steering wheel. This time, Jesus is not at the steering wheel. You get to enjoy the destination if the car moves forward, that is dividends and capital gains. But you have zero say on which route the driver takes or how fast he drives. So, what is the bottom line? ZEN is a massive player with huge market share, especially in supplying fuel to Ghana's mining sector. The business itself generates serious cash, but this IPO was a masterclass in founder wealth creation. Before you buy secondary shares in any stock, don't just look at the brand name on the filling station. Read the balance sheet, look at who holds the votes, and make sure you know whether you are buying a steering wheel or you are just a passenger heating up the seat. What do you think? Would you buy ZEN or would you hold ZEN in your portfolio at 10 cedis? Drop your thoughts in the comments, hit subscribe, and I'll catch you in the next episode.